Hi, this is Joe Rabil with Rabil Stock Research. So today I'm going to keep the lesson brief, but I want to talk about something fairly important. Since a lot of symbols came through over the last 2 weeks, I want to make sure I cover all those. But let's just get into this agenda because I want to talk about the use of ways to clarify price structure. And I obviously like to do that with the moving averages, but there is another way. And StockCharts.com software in ACP does a really nice job with this. So I wanted to make sure I covered that briefly. And I also like the idea of having two different versions of ACP running at the same time. So I'll get into that. But one of the things I wanted to show is when sometimes things might not look crystal clear in a specific setup, and you might be wondering, what are you seeing here? Is the trend up? Is it down? Or is there not a trend? And in most cases, if you can't see it real quick, it probably means there's not really a trend. But there are times where if you use this approach that I'm going to show you, I think it will clarify some things, especially when it comes to the triggers. Now, I always use price structure in conjunction with the moving averages to help confirm or refute what I'm seeing there. And most importantly, one of the things I wanted to state here is to make sure that you know that I'll always use price first and then confirm with indicators. I don't make decisions based on MACD and ADX and then look at the price. I look at the price and I look for supporting evidence based on those. Always start with price and then use the indicators to confirm. So once we're done with that, I'm going to go through the and analyze the stock requests that came through. So let's go ahead and get into this lesson. So I've got the chart of Deere up, and I've got a weekly chart on the left and a daily chart on the right. Now, when you look at this, it looks like a kind of a sloppy mess, especially when you look at it in relationship to what's taking place on the weekly chart. But I can see that the price made a move to the downside. It tried to break out, and then it made a move to the downside, and then made a really strong move off the low, and then pulled back and tried to hold the area of the 18, and we had a pinch develop here. Okay, now when I see that, whenever I see a pullback and we're in the area of the 18 and where MACD is holding its signal line, it always kind of piques my interest a little bit. Now, I did a video on this specific setup on my YouTube channel a few weeks ago, and I explained how this is a 2-time frame pinch. We had a pinch play here where we came in and pinched into the signal line on the higher time frame, and then the lower time frame moved up and had a minor pinch with 2 pullback here where we held the 18, and this didn't really pinch in, but the MACD was above the signal line. Now, what I wanted to show here is it's not crystal clear when you look at the pattern. I mean, yeah, you can draw your downtrend line in, and that might help a little bit in seeing this. But one of the things that I would suggest is to switch over. So have 2 different versions. So this is one version in your tab in ACP that you'd have, and then have a second tab where, let me click on this, and now you'll see this is a second version that you have. Now, I use the zigzag on this second version. Now, I typically don't run the zigzag all the time, but there are times when I really want to get a feel for price structure and really what's taking place, where I'll look at this. And if you look at what's taking place in Deere and now look at the left chart, the weekly chart, you see that we made a bottom here in June, and then we made another bottom in early October, and then we made another bottom here around March, and they're all around the same level. You can see that this is clearly an undercut pattern and a reversal back up. So this tried to undercut, but then failed on the pullback. This one had a really strong move to the upside, and this pinch play is actually a undercut and rally as well. It really strengthens the pattern when I see that this is an undercut and rally actually testing this 325 area, which happened to be support that was broken, and then we had the undercut and move back up. So when I see that on one side, now look at what's taken place on the lower time frame. We break the downtrend line, we rally up, we pull back, and we make the higher low. It's so crystal clear seeing the higher pivot low. This big green bar is an excellent entry point because that's really where this turns up. So I like to look at where the zigzag actually goes from zigging to zagging, right? It makes a move to the upside and we make this higher low with this big green bar. So I like to see that as we test the 18. It's a very high confirming signal, and I think a little bit better signal than what took place here. Now, you could take this signal absolutely no problem using this pinch play. But I personally, looking at this where the 18 is starting to cup around, we get a little bit more pronounced move in the MACD above this zero line, and then we get this higher pivot low with a big green bar crossing back above the 40. To me, that's your second entry, and I think that's the best one, where you're turning this back to the upside. So just throwing this on and having a second version of ACP running so you can click back and forth. The reason why I wouldn't have it running all the time is because I don't want that to be my focus. I want to look at the bars. I want to look at the candles. I want to just get a flavor for what's taking place in the moving averages and the price structure that way. And then if I feel the need to get a little more clarification, I'll click on that other version that I have running at the same time. So hopefully this helps, especially someone new to the approach that I use and using multiple time frames. I do recommend having this on all the time. You can make it fainter. You can use a slightly lighter color or something like that so it's not so pronounced, just so you can get a feel for what the price structure is telling us. All right, let's go ahead and get into the stocks now. Just briefly, my services can be found at rabilstockresearch.com. Also, the trading course is there as well, right at the top. It's $100 a year. Now, if you take the monthly individual package, you have access to the trading course automatically. So go ahead and take a look if you're interested. And let's go ahead and get into this charts now. Okay, so I want to do a little extra time because I do want to go through the indices today before getting through all the requests that came in. So S&P, as we talked about last time I discussed this on this show, we had this momentum divergence in place in MACD. And yeah, it was a divergence in ADX, but because it was staying above 25 up until recently, I don't know that I would consider that as important from a trading standpoint as what I'm seeing in the MACD signal. So when I see that and we get this kind of minor undercut, I'm looking for a rally. And we got back up towards the 18 and even pushed through the 18 on the weekly chart. Not only that, we kind of flattened it out by walking sideways over the last few weeks. So I've been saying I thought this was a really key area on the daily chart because we had made an ABC rally up to this 4,000 area. It happens to be where the 200-day or the 40-week is, and also the downtrend line. We're all everything's kind of centered around this one area. And I think yesterday's reaction is pretty important. We got this big green bar. Officially on the daily chart, this was the bar that changed the trend on the daily, where we get a 1, 2, 3 reversal. So this trend is up. And the way I look at it is every time we make a new high, as long as green DI is making a new high with price, then we should assume we're going to get more upside continuation. And my target has been up into this 4,200 area, back up to this prior area for the move. Now, that happens to be where the 18-month is. That doesn't necessarily mean that we're going to stop going up at this point, but I would be on the lookout for signs of distribution showing up at this point. Or maybe we get a bigger retracement or something like that, but key off this green DI. Now, what I want to do here, I want to switch over to the spider real quick because I want to show you why I think when I look at a daily chart with volume, why I think this is different than the last rally. So if you look at this rally that bottomed in June and we made this move to the upside, look at the volume pattern. We had a little bit of decent volume off the low, but then from that point on, as we moved up, there's not one day of abnormal volume. You see the green bars? Those are days where the market is closing above where it opened. There's not one day where we're above the 50-day moving average through this whole move to the upside. Now look at this bottom. On the bottoming day, obviously, we get really strong volume. Look at this day. This is a follow through, nice follow through action there with a big green bar and a big volume bar. We get another couple ones here where we're greater than the moving average of volume. Another big one here. And then we kind of go through a little pause. It got a little quiet during the holidays. And now look at what happens yesterday. So this is another massive green bar relative to the average. So I think this is a much better looking rally based on the volume action than what we saw the last time. Now, that doesn't necessarily mean we're just going to go onward and upward, but I'm seeing confirmation in what I'm seeing, especially when I see the green DI making new highs each time the market goes up. Now, it doesn't hurt that the MACD keeps holding its signal line and we keep getting these repetitive pinches taking place, but you know, now that if this moves up into this area and this moves up here, we're going to start getting into the overbought territory. That could make this a little bit more of a pullback risk. Now, one of the things I would tell you right now is the midpoint of this big green bar, which happens to be around 4,000 on the S&P. I think is pretty important in the short term. I don't really want to see that erased here quickly. If we do that, then this is more of like a false breakout that's not going to have a lot of follow through, and we could have some risk coming back down in the short term. But I'm leaning towards, based on everything I'm seeing, I'm leaning towards that not happening. But just kind of key off the 4,000 level. Now that we're above that, we really shouldn't break that back down below. Now, the reason why I want to look at a few of these other indices, because I want to show the difference in this over here. Look at this relative strength. Do you see what the Dow is doing? I mean, this is making, so every time this is moving up, it's outperforming the S&P. That's what this line is. It's just it's the Dow Jones divided by the S&P chart. So as a ratio, so you're looking at higher highs and higher lows. It's gotten a little overbought. Should it pull back a little bit? Probably. But that doesn't mean this won't go up. It just means that maybe on a relative basis, it'll retrace a little bit. The exact opposite is actually taking place in the Nasdaq. Look at how this is underperformed, dramatically underperformed throughout this whole year. And even before that, it really started in early 2021 where it started to turn down. And but probably between now and the end of the year, yeah, you could see a little bit more of a retracement rally, kind of like what we saw in July and August. So just something to be on the lookout for. I don't know that that really means it's changing its trend. I mean, as long as we stay below this moving average and below the trend line, I don't know that I would be all that excited about what I'm seeing. And I've been saying that over and over again to my subscribers, especially with respect to the big stocks like Google and Amazon and Microsoft. Those have downward sloping relative strength lines that are trending down. Until those change, I don't know that I'd have a huge focus there. All right, let's go ahead and start going through. I've got a couple of ETFs I want to talk about first that came through, and then some individual stocks. So we've got the XLE. Now, I mean, I know if you're looking at the oil chart, you're thinking this has to go down. But I'm just telling you, I've looked at this for a long time, and I don't see that being the case. I don't necessarily see any correlation that way. If the oil chart goes down, it doesn't mean that this is going to follow. In fact, most of this time that I've seen it over the years, if the stock's holding up better than the oil, then oil tends to follow, as opposed to the stocks following what oil's doing. So I wouldn't necessarily get too worried about this having a big drop based on what oil's doing. The pattern here is very bullish. It's going through a pause phase after an uninterrupted run of about 4 to 6 weeks, and it's pausing in a really, really healthy manner here. The weekly chart is just showing, up move and now a pause. There's no real signs of distribution. We can see that on the daily chart. You see how this has no sign of sellers really? The red line can't really break out and do anything. This is just working off an overbought condition in a very, very healthy way. So a little bit longer, maybe this spends another week or two, but I think there's more upside coming here. I really like the looks of this TAN. I mean, I know it's a little early. The 18-month hasn't turned yet. It's flat. But just the overall pattern, and then let's look at the relative strength in this. You see how we're talking about a really volatile index, so risk on, risk off type of a scenario. This should be a risk off. Like if risk off is the way to play, then this should not be trading well. But this is making This is doing way better than the S&P did. The S&P made a lower low here, and this made a higher low. You can see that in the relative strength. I think if we can come up through this 90 area, this could really get going to the upside. The price structure itself, I think, is really attractive. But again, we're making higher bottoms. So this is what I'm looking for. You see these higher bottoms? The S&P's been making lower highs and lower lows. This is making higher bottoms. This is the type of thing that could be a leader when the market actually makes a real significant turn and is really ready to go, which I'm not sure we're there yet. We might have made a low, but I don't think we're ready to go to the upside at this point. Okay, so I had a request come in, and I about this, and I wanted to just spend a few minutes talking about entry. So we've got this move to the upside and then a pullback on the weekly. Yes, this is a pinch play, and we've got green DI kind of confirming here. I mean, I like the looks of this. We broke the downtrend line, we came back and tested, turned up through the moving averages, and then we get this pullback. And because we made two lower highs and we have this tiny little narrow range bar, this looks really attractive. But what I'll say here is that I typically don't just, I mean, you can take this trade by itself and then use a stop on the weekly, or other ways, the way I described to my subscribers using ATR, but that is one way to do it. But most of the time, I'm usually recommending going down to the daily chart. And if you notice, we have overrun on this time frame, and this is the big thing. You see this big red bar? It's a massive selling bar. I don't expect to go right through that on the first try. So what I would do is I'd look at this as the midpoint of this is about the midpoint of the whole move. So somewhere in here, which happens to be the high of today, actually, would be resistance. And I would expect this to come back down and turn back up. Now, if this can climb up from here and then form a pinch, that would be interesting as well. But I don't have a problem if this comes down now and then turns back up. But that's what I'd really be looking for at this point when MACD overruns. All right, so I wanted to make sure I covered that. The big red bar has pretty significance to me, a lot of significance to me when it comes to the trigger. I know I'm looking at MACD, I know I'm looking at ADX, I'm looking at the moving averages, but the price is the first thing I'm seeing. Okay, let's look at Amgen. And one of the things I wanted to mention here is, let's just look at this. You see, this is basically the biggest green bar on the chart. If you go back all this time, this is a pretty big green bar as well. But this is happening at the breakout level. So I talk about this in my trading course. I think the first thing I do is go into the candlesticks and kind of what I'm looking for. And I think this is a very important breakout bar. I do like the pattern here with the MACD turning up. I like the idea that we've had this consolidation pattern, and now ADX is kicking into gear here. Now, ADX was kicking into gear here, but it doesn't have as much importance to me as here, even though they look about the same. Why is that? Because price is actually breaking out this time. Price comes first, and then we look at them, and then we look at the indicators. It's not the other way around. I'm not going to go look at the indicator and then force a trade here. I'm going to see what price is doing and then seeing if I have confirmation on an ADX basis. So I wanted to make sure I mentioned that in the agenda. I wanted to make sure that was covered here. So this is very bullish. Any kind of a dip back down towards this breakout area, I think, is a viable situation. Okay, so I've got a Toronto stock request that came in. And look at this. Look at since 2021. Look at this relative strength line, how this just keeps going up. What I wanted to focus in on is the weekly chart. And one of the things that I've found is, I like the pinch plays, right? But sometimes MACD will do this thing where it just keeps crossing over and it doesn't come all the way to the zero line. And we did have a reverse divergence here, but a lot of times, other times you don't get the reverse divergence. So how do you view this? How are you supposed to handle this? Well, this is where ADX comes in for me. And the other reason why when I describe my swing trading approach is I want to see if this goes to a new high, I want to see this go to a new high. If this goes to a new high, I want this to go to a new high. This goes to a new high, this goes to a new high, right? I mean, I'm getting confirmation. That's what I'm looking for. I'm not as worried about the overrun if ADX is strong. In this case, ADX is very, very strong. So this overrun is not going to prevent me from taking these trades, these swing trades. Now, this was a little tough because we didn't really get confirmation. It didn't go to a new high. So maybe here would have been a little bit tougher, but all these others are pullbacks that are playable. The other thing that you should look at is look at these moving averages. I mean, these are just a thing of beauty. That is parallel, I mean, almost exactly parallel, and they continue to be. And every time you see that, anytime you get a pullback to those lines, you want to be thinking to be a buyer. So I like this. The problem we have right now is that we've broken away. Now the person who requested this actually was a few weeks ago, and so unfortunately this is actually carried through. If this would have pulled back, this might have been worth looking at again. But just keep an eye on stocks that are pulling back like this over and over again to the 1840 area. Okay, so NVAX, a lot of damage done, massive move to the downside. Have we come down to an area where I'd kind of expect support to come in? Yes, I think so. But this is the type of thing where I use the analogy of the injured athlete, where when you break down like this, you have to go through a full rehab phase. And what that means is you're not going to V-bottom. So even from here, you're not going to V-bottom. You're going to go through a pattern where it cups around like this. And I want to buy on the right side of this cup, of this saucer. I don't want to buy on the left side. Right now, we don't even know if we've made a bottom yet, but if you're buying, you're definitely buying on the left side of a saucer because we don't have a saucer yet. So we have to be patient. We got to let this work sideways because there's so much damage done, because this has taken a big drop. It doesn't mean you can't get little trading rallies. You know, maybe this wants to get some kind of a trading rally in here as it's cupping around. But in terms of looking at a big picture reversal, I think it's way too early. A couple of steel requests. So US Steel, my personal opinion is I would look at something like STLD or RS or something like that. I think those stocks look a little bit better than this one. There is improvement taking place. We had a move to the downside, found support here and tested it and came back up, trying to come back up through this prior high. But you can really see these big red bars on the monthly chart. I think there's going to be problems here at 30. So it doesn't mean it can't trade a little bit higher. But at this point, even if it climbs, I would think from 30 on, this is going to underperform the group. If the group is going up, this has resistance that others don't have. So go and look at a stock like RS and you'll see what I mean. It's already at a new high right now. Another stock that I actually think looks more attractive is NU. This does have a little bit of resistance on this spike high here, but the overall pattern looks a lot better. It's in better shape. The monthly chart is rising. Yeah, there's going to be some resistance up here, probably in the midpoint, up in this area. Let me just give you that number. I would say, probably about 160, 165, something like that. So there is a trade here, but again, I would probably take a look at a few of those others that I mentioned. I think you'll find better looking overall price structure, better looking momentum conditions, and less resistance. Okay, so Airbnb. So when I see a chart like this that doesn't have a lot of history, you see how we don't have much history on I got a monthly chart that's moving down. I got to focus in on price bars and just see kind of what things are telling me. And right now, I mean, just looking at this, it just seems to me like I got to get back up through this level here. This is the key level. Bottoms here, another bottom here that we failed at, and then look at how we failed at this. So you can go down on smaller time frames and trade off support into resistance, but if you're looking for something more meaningful, we got to get back up through this prior high. That's up around 130. Doesn't mean we can't trade a little bit, but it's not, I don't think this is a turnaround pattern. To me, there's not any signs of a real turnaround at this point. It's a potential trading play, and that's about all I get out of this at this point. I don't see momentum or anything like that. Look at the relative strength. It's still trending downward. One thing I really recommend you guys do is draw trend lines on the relative strength to go along with the price and see if it's confirming or refuting what you're seeing there. Okay, I want to make sure I covered the KLAC because look at what's taking place here. This is, I mean, the semiconductors do look like they've made a little bit of a bottom, but this one is just standing out as a stock that was at a new low not that long ago. But look at how it undercut this bottom and then reversed on a dime. Strong move, big reversal off the low, big bottoming tail type of a pattern on the monthly chart. But look at the dynamics of this rally. Look at the move here on a relative basis. The big move to the upside is confirmed our relative strength. Now, because we're up against this resistance zone up here around 400, I would love to see this form a red bar, a pause bar, or something like that, and then get through this 400 area. And I think this would be really, this is definitely one to watch, especially if you're looking to add on something in the technology area, in the big cap technology area. Thanks for joining me. My research can be found at rabilstockresearch.com, as well as the trading course. Also, if you have any stock requests, send it to stocktalk@stockcharts.com. Thanks and have a great week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.